All right, guys, welcome back to the channel. Well, the big news today is that Elon Musk and Donald Trump are fighting it out over on X. More on that in just a sec, but we're looking at the price falling here for BTC down 10% from the high, as we have been expecting, with the probabilities in our favor that this move to the upside needed some time to rest. So we're going to review the charts on Bitcoin. We've also got the stock markets as they continue to test the 6,000 point level, what all of this infighting means to the US markets, and of course the bonds and the yields. And in the last 24 hours, we've also seen a 13-year breakout here for the price of silver. So that could be setting up for something quite interesting. So don't go anywhere, hit the like, subscribe to the channel to have a macro cycle analysis. Today, we're doing a nice big update as we're seeing the markets fall at this point. This is for Bitcoin, Ethereum, cryptocurrencies, and of course, some of those big stocks like Tesla. So in terms of the longer term, the market has hit its 8-year resistance level. This has been here for a number of weeks now, and it almost seemed impossible for this story to repeat, but we're seeing it yet again. And it's pretty simple, which almost seems ridiculous that it could happen again. But the main thing we're looking out for here is a sign of a pullback, a healthy correction here for BTC, some consolidation over quarter 2, quarter 3, finding a low, and then having a relatively good time towards the end of the year. So basically just holding out here. The correction on Bitcoin continues, now down 10% from the high of 112,000, touching a new fresh low of 100,000. Now, of course, the big news overnight, and as sad as it is, Musk, the richest man in the world, is battling it out with the president of the free world over on X. They're calling each other names. Essentially, it all started with the big, beautiful bill, essentially spending over $1.6 trillion after Musk and his Doge tried to rein back all of the spending. So this has just been an absolute massive tweet fight over on X. And of course, the markets aren't liking that so much, or at least Bitcoin and of course Tesla. Tesla is also corrected quite heavily here. Now, along with the fight that's going on, we're seeing further progression here for the bonds, the yields, and of course the stock market. So I've got heaps to get through with you guys today. Hit the like, subscribe to the channel if you are new here. It's your home of macro cycle analysis, and of course the 18-year cycle. We're still heading up towards this peak, even in the face of the richest man in the world and the president of the free world going at it over on X. First up, let's have a look at Bitcoin, and then I'll get into the rest of the traditional markets. A new 13-year high for silver as well, and of course altcoins that we'll cover as they continue down. Bitcoin continues to fall 10% from the high. We've seen the 7-8-year resistance level get rejected again. Now, my overall view here is that Bitcoin will still have another move higher, another test of this level, and it seems like we're in the midst of looking at a healthy correction at this stage. If we bring it back down to the daily chart, we can see we've dropped into the 100 to 103,000 zone that we pointed out yesterday after Bitcoin got rejected at the 106,500 level. Congrats to everyone that was watching that. It was a very, very important level. You can see it was a swing low that held support and then broke down, came back and tested the underside of that level. So a really clean example of support becoming resistance. And we watched that happen in real time. These 2 days came up, and then we got this day here, a test, and then basically pulled back. And of course, yesterday just crashed through that swing low. Now, that 106 was also important from the lower swing top. So that's why that 106,500 has been a critical level. So here we are. We've pulled back, and in terms of the time frames that we're watching, top to low is now 14 days. So we've hit the 2-week mark, and we've broken down those swing lows. So now we look out towards 21 to 28 days for another cycle low here. 21, 28 takes us out to roughly mid-June, around the solstice date. So right around that midpoint of the month. Now, we looked at corrections to the downside based on previous corrections that Bitcoin has done after a 6-week move to the upside. If we get a 1 or 2 week correction, how far does it go? If it happens to be a lot longer, like we saw in Q1 of 25, or if we get the correction like we did here with that 5-month correction from March into August, those ones there are roughly around 30 to 33%, which takes you all the way back to that 70K low. Now, I'm not saying that that is what's going to happen. I'm looking at the shorter term correction first, and that percentage was around 10 to 15%. So 10 to 15% is where we are now. 10% is here, 15% is about 95,000, and our 50% level is down at 93,000, which is roughly a 17% correction from the top. So all within the parameters of what Bitcoin has done throughout this entire bull market. And if you are new to the game, the bull market has been going for 2.5 years. November 2022 was the low. We're currently in June 2025. It's crazy how far this has gone. So here we are. The next levels, as I said, we're looking down towards the zone of the mid 90s up to where we currently are at about 100. So really only about $5,000 in that zone. So many get hung up. If you're looking to enter the market, this is something practical to use here. If you're looking to enter, it's at around 100 now. So you really have to have a look at how much further down am I trying to skim out of the market compared to where it is. So how much risk are you willing to take? Are you willing to hold and wait to enter your position, or are you happy to get in here? And if it does go against you, you can look down as far as 6, 7, 8%. That's what you would have to endure in terms of a drawdown. And then have your stops in play in case it goes further. Maybe it breaks the 90K level, and that might be your area that you say, okay, that's enough damage for me. I need to get out. And if you can learn to take losses, trading, investing is going to be a hell of a lot easier. So that's something practical to take away from any sort of positioning in the market. And we've looked at the short term and the longer term here with the weekly chart. 6 weeks up, now we have 2 weeks down. So we're well and truly into a healthy correction here. And I think all of this jargon that's going on with these two online essentially will be water under the bridge in 6 months' time. The USDT dominance isn't looking great for Bitcoin or cryptos in the short term. And of course, cryptocurrencies are getting affected more so than BTC. It's come all the way back up to the 50% level at 5%. So this is the range that we've been following, low to high. Slice it through the middle. That's your 5% mark there. Spare me a fraction of a percent. Now it came under the major 50%. So I'm only looking at those two levels because one is the most recent 50% and the other is the entire range. So they're the two most important levels thus far. While the USDT dominance remains between 4.5% and 5%, we're not really going to get any clear leads on the rest of the crypto market. If it starts to move higher than this point here, we start breaking the swing top, and then of course the downtrend right here, that is going to be bad signs for the bulls, for the crypto and Bitcoin bulls, those who want the market to go up. Whereas if we do see some rejections coming up soon at 5.2 or even here at 5%, again, we're going to see rises in BTC and cryptos, but more so in the stronger altcoins, as I'll get to in just a minute, because several of those altcoins have begun to break down against their BTC values. They're the altcoins you don't want to be in, regardless of all of this altcoin narrative that there is going to be an altcoin season one day. Regardless of if it's Donald Trump spending the money, you're still going to have the Fed spending the money as well. So Trump's got his bill in, the Fed's also going to be printing their money, or at least talking about more printing and then eventually doing it. It doesn't look like the Fed is going to decrease the interest rates until, well, they're saying here until Trump is gone, but there's really no reason for them to be decreasing the interest rates while the market is so volatile. And you can see this is what the market is thinking with the US government bonds. The 10-year yield still remains elevated here at 4.4%. The 30-year yields are also elevated at 4.9%. Remember, the cash rate's at 4.5%, and the bondholders, at least for the 30-year yields, are getting more than the cash rate. So that's more than what you're getting when you put your money in the bank, 4.9% for these 30-year yields. Of course, on the flip side, holding these bonds means that they could go up or down. For the last couple of weeks, they've gone up from a low here at 110 to around 113, but the overall trend now for several years has been a pretty steep decline. You had 2020 at the peak around 191 on the bonds, all the way down to 113. So in order for people to want to buy these things, there's got to be some sort of reason to put up with a 40% loss on your bonds had you bought back in Q1, Q2 of 2020. And therefore, that's going to come from the yields. So it really seems like the Fed can't put the interest rates down. And then that, of course, is going to have an impact on everyday people because interest rates are going to remain high, even though shit is getting expensive over there. And you can see that, well, at least this is what's happening in the end of the cycle, our 18-year cycle, 14 years up, 4 years down. And when I say end of the cycle, I only mean end of the 14 years to the upside. This cycle never ends. It just keeps going round and around because land prices are allowed to be speculated on. If we weren't allowed to speculate on real estate and real estate prices going up, we wouldn't have this boom bust. That's how this thing is created, and it will never go away. It's that simple. It won't go away because we are always going to be speculating on land. Could you imagine Trump saying that he's going to stop people speculating on land? That's his entire business. That's all he's ever grown up on. 80 years of speculating on land, developing land, and profiting from the gains in the land. So while this goes on and the president of the free world basically runs his business, his family businesses, and all of his offspring from that point, that's not going to change in the next 4 years. And it is guaranteed that we are going to see a peak and a collapse in this cycle. And you can see it from what the Fed's doing. They obviously have to print more money. Where is that money going to go? Eventually, over the years, it all ends up in the value of the land. Companies make profits. Profits have got to go somewhere. They either go to people who are holding the company stock or the company itself holding the cash. Those companies need land to put their premises on. People work somewhere and they live somewhere. Therefore, that money goes back into the land eventually. It eventually all finds its way back into the land. And what we've seen over 200 to 300 years, I'll get to these memes in a sec, is that it cycles roughly around 17 to 23 years with an average of 18.6. That's why we're looking out for a peak sometime next year. Then you'll see things roll over, but the media might not look like that. The feeling most likely won't be like that until you actually get the crash, kind of like 2008. There was a peak in 2005, 2006, and for the UK, somewhere around 2007 for land prices, but people didn't feel the crash until 2008. That was when you had the Lehman Brothers collapse in September, October of 2008. So although there is a peak coming, there's no bell that's going to be rung and said, here is the peak, get out now, things are going to be really bad. It's more likely going to be, there is more money coming and this train is never going to stop. Trump has said those things before and he'll say them again. The train is going to keep running and running and more money getting piled in, but you'll start to see the cracks in things like the bonds, the yields, so on and so forth. So that's my rant about the cycle. Let's have a look at the S&P 500 over the last couple of days. You can see we've hit the 6,000 point level again, pull back, and this is trading in a similar pattern to the cycle that we've been watching here. So this is a 5-year cycle back from the GFC. Looks like it's got a little further to go. And then the correction that we're sort of in the midst for, which is around that June period. So middle of June, coming up to that next week, watching out for a bit of a top and then a correction. And then Q3 for another correction in August. You can see here, another move higher and then a correction in October. So it's not like these are going to be significant, at least from what I can tell. It doesn't look like we're going to get really major corrections like we saw in February, March, and April. But there's still just going to be some small corrections along the way that we can see here in the cycle analysis from 20 years, the 10 years, and the 5-year analysis here. Okay, now a quick little meme on Tesla, Elon Musk and Trump fighting it out, and the shorts are loving it. You can see from Tesla, absolute obliterated day, 14% down. And while we're at it, looking at stocks, MicroStrategy also had a bit of a tough day as well. This cycle continues to play out here, lower highs overall, and MicroStrategy has not put in a new high. Meanwhile, Bitcoin has put in a new high and it's had another down day here. So watch out for some breakdowns at 350 and then around that 330. It can still rise after it breaks down, but that just puts it in a weaker position. So the rises will probably get lower and lower. If it can hold this zone, 330 to 350, then we might get a breakout of 430. Probably leaning more on the side that we're not going to hit a new all-time high. I've said that many times before, and I think this is just setting up for a weaker and weaker position for MicroStrategy for the long term. Okay, over to silver, something a little bit more positive, or at least upside here. We've got a 13-year high here for silver. Gold is not putting in new highs at the moment. It seems like the game has gone to silver for the short term, and we're starting to see the gold-silver differential favor the silver position here. So in another video coming up, I'll go through the gold-silver ratio, but for now you can see that we've got a new 13-year high for silver. Now, I posted about this to the members in Discord and what I'm looking to do with my longer term portfolio. So if you remember, go and check that out. Otherwise, if you're not, you can check out trading results, TIO reviews, link in the top of the video description for the report, and you'll get access to the free Discord. So well done to you guys, crushing these absolute mega gains here. Well done, Plant. So here's one to burn the eyeballs. We're looking at the Crypto Fear and Greed Index. It's hit fear, obviously with Bitcoin down a few percent overnight, but this is all part of the reset, at least in my opinion, from my analysis, that I'm looking for, so that we don't get too overheated too early. Part of a healthy correction from this 6-week move to the upside. We had a day in extreme greed, the rest of the time was just greed, and now we have this pullback down to fear. So all in all, relatively healthy. For the liquidations, they hit, can we call it $1 billion? You happy to call it $1 billion? Just spam me a few $1 million here. This one here hasn't reset yet, but essentially in the last 24 hours, $1 billion liquidated, 900 million of those being the longs. Of course, Bitcoin tanked around 3%. And if you're following over on Mix channel, he looks very heavily at the long-short ratio here. There is a massive differential going on. That's over 6%, 47 to 53. So 6% difference here for the longs and the shorts, very heavily stacked on the short side. What this means is when we see it, probabilities say that you're going to see some sort of snapback soon. It doesn't have to be this moment, but within the next few days. I would suggest going over check out Michael's channel as he goes into that in more detail, and it's a nice signal for any short-term traders. For the exchange volume, we're still holding up here. We've got some higher highs and a grinding effect now at 40 billion, so still above the lows of 30 billion. So yeah, not much to see here until we get the next couple of days data after this correction. I suspect it's going to be a little higher, which puts us into some sort of picture like Q3 of 2024, where the market basically bottomed and then started to push higher. The Google Trends for Bitcoin and crypto search volume, both are up in the last 24 and 48 hours, with Bitcoin putting in a higher high just slightly. It's at 51. Like to see it get back towards roughly 60. So this is all still trending relatively well. We haven't died off here at all. 12 months, looking at the data here, crypto and Bitcoin, it has trended down for this week, but it's at 32 for Bitcoin. Meanwhile, the lows were at 29 and 30. So far we've got higher highs, and if this is able to hold, then we'll have higher lows as well. So the total market cap, this is others, the dominance, hits a new 4-year low closing price. Not the price overall, 7.33% the low, and yesterday was 7.39, but the close was the lowest here. What this means is that altcoins overall, excluding the top 10, are still in their downtrend. They have not been able to hold the ground yet, recover, and start to break some of the previous support levels. So they've still become resistance. On the way down, resistance finds its ground, breaks down. Resistance, resistance, a quick bounce out, another hit at resistance, and then it broke down again. Resistance, and then it breaks down again. So really it's just grinding sideways, breaking down, grinding sideways, breaking down. This can go on for several weeks until there's a breakdown. Otherwise, if it's going to be any sort of alt season, you need to start seeing the ground being regained and the resistance levels broken through. At the moment, no levels have been broken through here on the others chart. So crypto total market cap excluding the top 10. For the total crypto market cap, we're having a pullback at the moment, 50% levels at $3 trillion, currently trading at 3.13 trillion. So still a little bit of room to go here, and it could spike down to 2.85. Previous high, previous lows, still within the game plan here for the bull market. Whereas total 3, which is your altcoin market, excluding BTC and ETH, is now breaking lower underneath those previous highs of 350 billion. And remember, we looked at the 50% level where this chart needs to get back above 900 to 950 billion. That's the key level there for any of your major altcoin seasons. That's why I got here. Altcoin season loading, it's got to be above this zone right here. Otherwise, things are still looking like they're in trouble. And Ethereum failed to get above the $2,750 level, did not get a fourth time attempt. 1, 2, 3. Failed, did not get anywhere close to testing $2,750 for a fourth time. Therefore, it has now failed. It has broken 2 of these swing lows. So there was no breakout signal, failed at the 50% multiple times, and then broke down. So for the short term for ETH, low to high, corrections down to 23, strongest, still within range is 2,100. We start breaking below $2,100. That's going to be some signs that things are going to get a little weaker here for Ethereum. ETH BTC still holding up okay, all things considered. That's why there's probably a little bit more strength on this side, seeing as it's still above 2.2%. So you can see here on the chart, 0.022, that's your 2.2% of BTC. Breaks down underneath that level, going to get a lot weaker. And if it gets back underneath 2%, we'll talk about it if it happens. XRP BTC still holding above 50%, 2,000 Satoshis. So it's still just on the strong side, but in a relatively weak position. We haven't seen any sort of significant bounces. XRP BTC, as we looked at, 2 days ago, this is in a strong little bounce here. So one of the stronger ones, SUI broke down from the trend line and continued lower. It's heading towards the zone that it reaccumulated before the bounce. So this was all hype. That has now been, can we say it's confirmed? I'd say once it gets below 2,700 Satoshis, that's when I'll say that this was all a bit of a hype bounce, and it's basically tracking around, waiting for another move. Solana BTC, same sort of deal. Hype move to the upside, rejected at the 50% level, and has now closed back within the zone before it broke out. So not great things for all of these altcoins against their Bitcoin pairing. And just before I get onto the US dollar pairing, so you can see here on the weekly chart, fell for a long time, weak bounce, failed to get above the resistance level. So you can see support becoming resistance, and then corrects again. Still got the low here at 13,000 Satoshi. So, if you've got any sort of thing to hold on to your hopes, there are those 2 lows there. So they're the 2 last things to hold on for your hopes with Sol BTC. Down back towards $145 underneath the 50% level. Still 3 days to go for a weekly close. You can get a nice weekly close above that level. Maybe there's some slight savior here for Solana. SUI is on the 50% level now at $2.95 for, and the 50% levels at $2.91. So it's just sitting on those levels for the time being. XRP is at 210. So it's still in its stronger position while it's on its USD chart, but you've got the 50% back here at 184. So I would say if XRP BTC starts to break this line and this line right here, you'd probably see an acceleration of XRP USD. But if it can hold those lines, no worries. Your XRP is going to hold up relatively well. And for shits and giggles, we'll throw Doge in here because that's had a bit of a tough day, obviously, with Trump and Musk having a go at each other. You've got the weekly chart. Doge BTC finds a new low today. So all of these new lows against Bitcoin, all these altcoins hitting new fresh lows, is the reason why your others chart has also hit a new fresh low. Now, something I've been beating the drum about for a long time. I get it. Yes, one day these things are going to bounce. You just want to be on the right side of them, but just have a look out for certain strong signs of when the overall market is looking like it wants to hold its ground. In the meantime, Bitcoin's got the best strength out of anything here. The 18-year cycle still looks well and truly on track, especially with all the BS that's going on. And Elon Musk also calling for another recession. He failed to call the one in 2022. We said it was absolutely not going to happen. He's looking for a recession in 2025. I don't think that's going to happen either. I think we've got further upside to go. And then you can look at some sort of recession after sort of 2026, 2027. Thanks again, guys. I'll see you back here at the next video. Links in the video description for Michael's channel and for our Discord. Catch you then.